Well, that was fast. I feel like just yesterday we were talking about how the market was declining every single month, back to back to back, and now we are coming back upon our peak high here in the Spokane area. So let's talk about how quickly the market here is rebounding and what the future holds for Spokane real estate prices and how long this market is going to stay affordable. Let's get into this video. So just to recap where Spokane has come from, pre-pandemic, the average Spokane home was $275,000, and then throughout the pandemic, we had a couple huge ramp ups in price, ending at a peak high of $460,000 in May of 2022. Now, as interest rates rose rapidly, prices dropped in Spokane for 7 straight months in a row until January, finding their bottom at $380,000, and now we have bounced back up in 2023, even with interest rates remaining high, as inventory is at record low levels, causing there to still be a supply and demand issue, even worse than there was in the last few years. So through this video, we're just going to break down what you need to know about the Spokane real estate market, where we're at today, and the trajectory for the Spokane real estate market, and how much longer do we have for the average home price to be under $500,000 here in the area. So currently in Spokane, the median home price as of May 1st is $425,000, which is up 3.75% from the month prior and up about 10% from the start of the year. So now trying to figure out what is going to happen here in 2023. When are you going to get the best deal? Are prices peaking now? Or are they going to peak later? Well, I always look at historical data just to look at the trends. And if you go through the graph that's on the screen here, you can see that every single year prices go up and they go down. But more recently, prices have gone way up and then way down, and the market's been a lot more volatile. It's starting to look a little bit more like your favorite tech stock or Bitcoin versus a traditional real estate market. But at the peak of each of these years is the month of July. So over the last 10 plus years, every single year, the highest sales price is always in July, and then it starts to taper off until January, and then it just starts the cycle over again. So I would expect to see this graph continue to go up until July of this year. And so it'll be very interesting to see if we make it back to that peak high that we were at of 460,000, if we just barely miss it, or if we go beyond it, depending on what the competition looks like this year. So if you're somebody that thinks they might only be in their house for the next 2 to 3 years and every dollar counts towards your equity, then maybe buying now versus in the middle of the summer, or waiting until the late fall and the winter will be a chance for you to get the best price for this year versus maybe paying at the top amount in July or August. So you would think as prices are going up that the amount of real estate activity would also be going up, but that was actually not true for this last month, as the numbers are showing that the number of closed sales last month actually tapered off a little bit when it was at 438, which was down about 13.5% from the month prior and about 34% from the year before. So we're still seeing much less actual sales happen in the Spokane area. So what's really happening right now is that there's a drop in buyers and a drop in sellers. During the pandemic, you might have said that the number of buyers was all the way up here and that the number of sellers was all the way down here. And over the last year or so, we've just seen the number of sellers stay kind of close to the same, but the buyer pool has come down and come down. And then recently, over the last 6 months or so, the number of sellers kept dropping, but the buyers kept dropping with them as well. So now we're seeing the same ratio of buyers to sellers that we had maybe last year, but there's a much lower amount of each of those, meaning that there's less sales going on. And so that's why we're seeing the market still move very quickly, still seeing competing offers, all this stuff. It's just with less of them happening. And so really the only people that affects is, one, the real estate agents, because there's less transactions for us to do, and really anybody else that works in the real estate industry or a real estate adjacent business, which there are hundreds of them, because there might be less activity going on. There's less homes to paint, to get ready for sale for the market, or there's less homes to inspect, all these kinds of things. But what this is doing is keeping the days on market incredibly low. And so right now it is at 6 days on market, which is a day less than it was last month. And so things are continuing to move very rapidly. I know from my own experience just this last weekend, I have a buyer that's looking in the $1 million range up on the South Hill. There were 2 homes that she had questions about, and they were both under contract within 2 days of the market. So this is happening in all price points, but specifically if it's a great home in a very sought after neighborhood, somewhere like the South Hill, then those are where you're going to see your most extreme situations, multiple offers, moving quickly, or inventory just being taken off the market very rapidly. But here's some good news for the buyers out there. So last month we saw an increase of inventory again, and so we were sitting at 839 new listings, which was up about 7% from the month prior, but we are still down 14% from the year before. So that again reiterates that this is what's causing the supply and demand issue, is that we are down from a year prior that was already a historically low year for inventory. And the number of pending sales, the number of homes that accepted an offer, also went up about 24% last month, but again was still down from the year prior. And so these two numbers together is how we factor our month's supply of inventory. How many months would it take to sell all of the houses on the market? Anything below 6 months is considered a seller's market. Anything above 6 months is a buyer's market. And so I think a lot of buyers out there feel like they have a lot more opportunity, or they felt like they have a lot more control, but we're still in that realm of being a very hot and heavy seller's market. And so we're sitting at 1.8 months of inventory currently, which the good news for you as a buyer is that we are seeing that increase of inventory that we've been talking about over the last couple months. We're seeing more homeowners put their houses on the market, and so we're getting more options for you to choose from. A few months ago, there was very slim pickings, and so that is actually great news that there are just more houses to pick from while you're out there shopping. And then just a warning to you sellers out there is that as you're weighing the pros and cons of when to list your home this year, you might be thinking that you want to list in like late June or July because that's when the highest sales price happened. Well, I want to give you a couple caveats. One, that sales price is reported at that time because those are the homes that actually accepted an offer in May and June that sell in July. So now is a great time to do that. And then two, as inventory continues to increase, you are going to have more competition out there on the market. And yes, we will see a seasonal increase of buyers in the market, but depending on what interest rates do, we could see a decrease in the number of buyers out there and an increase in the number of listings. And so days on market could go back up. And so it's really just hard to predict what is going to happen with interest rates right now. A lot of lenders that I work with believe that we're going to be in the 5%, even potentially at 4.5% by September. And this is coming from the mortgage lenders, so they are very hopeful for that so they can get the refinances and get that other portion of their business back. But there's a lot of other real estate economists that believe that we're not out of the thick of it in terms of inflation, and that we could be seeing 7%, even 8% interest rates into the fall, depending on how the Fed reacts. May 11th is a really big day for interest rates because the inflation report is supposed to be very good news. And so depending on what the Fed thinks, we could see interest rates fall in the next week from the time of this video posting. And so just keep an eye out for that because it could be a really good opportunity to jump into the market, lock your rate while there's a good amount of inventory and the interest rate is low. So with my little crystal ball here, what I'm seeing and what I'm predicting and what I just want to throw out there is that if you're somebody that's watching this video right now that is on the sidelines, you're trying to figure out if the market's right for you or when to jump in, or you're getting ready to purchase a home, I just want to throw out some basic math for you out there. So historically, real estate market will increase about 3% every single year. And what I think a lot of people don't necessarily conceptualize is that when prices were $150,000, a 3% increase was $4,500 per year. So it was just very minimal. But as prices continue to go up 3% every year, that 3% chunk becomes bigger and bigger and bigger, and it's this exponential scale. And so 3% of now 425,000, 450,000 starts to become 12 grand a year, 15 grand a year, and the numbers start to increase a lot more rapidly. And so if we just take a 3% growth of our real estate market over the next 5 to 6 years, the average home price in Spokane will be above 500,000. And so if you're thinking that prices today are unaffordable, even on a very conservative estimate, prices in 5 years from now will be above the $500,000 mark. And so it would be better for you to purchase in now, even if maybe you don't feel 100% ready, or you think the market's gonna go bad or something like that, it's just more likely that you're gonna hit an upswing. You're gonna make 50 grand just from owning the house plus your principal pay down. And don't get me started on if you want a house hack or have tenants in your property, anything like that, where you're getting them to pay for the mortgage rather than yourself. So I can't predict everything in the market. I don't know where interest rates are gonna be next week or in next month. I don't know where prices will be next week, next year, next month, whatever it is. But historically speaking, that if you buy today, in 5, 6, 7 years from now, it is more than likely that you're gonna be way up and it will have been totally worth it. And if you are buying, selling, investing in real estate in the Spokane, Washington area, I'd love to be your real estate resource. Call, text, email anytime, or use the link down in the description to book a call on my calendar at a time that's convenient for you. Thanks so much for watching the video. I'll see you in the next one.